Are you struggling with your business finances? Do you feel that money is coming in and going like just like this? If so, you need a proper budget. Hi, I am Rohan Mehta, a virtual CFO consultant, and in this video, I will teach you basics of budgeting, how to create a growth-focused budget, and how to stick to it. Stay till the end for a pro tip that can change the way you manage your budget and your business. Before we dive into how to build a budget, let us first understand why is budgeting so important for a business. Without a proper budget, a business will struggle with proper cash flow management, uncontrolled spending, lack of financial clarity, missed opportunities for growth, and will be always unprepared for a financial crisis. However, with a proper budget, you can plan your expenses and investment, you can control your costs and increase your profitability, prepare for unexpected financial emergencies, and most importantly, track your business growth and financial health. Now, let us understand some key concepts which every businessman should know before making a budget. First, revenue. Revenue is the total income that your business generates. Second, expenses. All expenses that a business incurs. These are fixed expenses such as rent, salaries, and various variable expenses like purchases for inventories, commissions, marketing expenses, and so on. Net profit. The money you, this is nothing but excess of revenue over your expenses. Cash flow. This is the movement of actual money in and out of your business. And lastly, forecasting, that is predicting future revenues and expenses based on your trend of past. Now it's time to get practical and create a budget that will help your business grow. First step is to calculate your income, that is your sales. Break down your sales into various line of products that you are dealing in. The more detailed you go, the better it will be to track on a regular basis. This will also help you to keep your sales team accountable for the sales target that they need to achieve on monthly basis. You can always use past data to design a realistic sales budget. Second is estimating or budgeting your expenses. The expenses are majorly classified into fixed expenses and variable expenses. Fixed expenses are something which will not change with your increase in sales. This includes majorly your rent and salary. This can be estimated based on your past data. However, you can adjust it with year-on-year inflation. Then there are variable costs such as marketing costs, commission costs, purchase of inventory. This usually comes as a percentage of sales, and again based on your past data, you can decide that percentage and accordingly estimate your expenses for future months by applying that percentage on your sales. Also, you can highlight or distinguish essential and non-essential expenses so that when it comes to cutting your expenses, you know which expense you can cut. Next step is deciding on profit and your growth plan. Now, based again on your sales and expenditure, we decide what profits will the company making, and accordingly we can plan our growth tasks such as hiring of new team, marketing expenses, expenses for expansion, so that we are able to achieve our planned growth. In next step, we will allocate our income to various expenses depending on our growth plan. So we will be allocating our expenses to operating expenses, to marketing expenses, to government taxes, and after this what will left is our savings. We will allocate a certain percentage for miscellaneous expenses, a certain percentage for emergency expenses, and after all this what will be left is our savings for the year. Now the last and the most important step, break this yearly budget into monthly budgets and track it on a monthly basis. You need to compare the budget with actual data and analyze the variances that are there. You need to understand why these variances are there and take your action accordingly. If these variances are unavoidable, then you need to adjust your budget accordingly. Now that we have prepared the budget, we also need to make sure that we stick to that budget. Here's how you can ensure you follow the financial plan that you have made. First, use budgeting tools. You can use your accounting softwares, inbuilt budgeting features. You can use tools such as Excel, Google Sheet to help you track the budgets so that you are not missing the numbers. Second, set monthly review meetings so that you are reviewing your budget on a very periodical manner, and whatever changes and actions are required, you are taking it proactively. Cut unnecessary expenses. Based on the actual numbers and budget, you can identify unnecessary expenses and you can cut them immediately. And lastly, involve your team. Making budgeting a team effort will give you a better accountability. So a budget is not just about limiting your expenses, but it is about making smarter business decisions to grow your business. If you follow this budgeting roadmap, you will always have a clear financial direction. And here's a pro tip. Always maintain 3 months of emergency funding for your business. It will ensure financial stability even when the sales drop or some unnecessary expenses come up. If you find this video helpful, hit that like button and subscribe the channel for more such finance tips. You can let me know in the comment box if you have any questions. Also, follow me on Instagram for daily financial tips. See you in next video.